Hello everyone, this is Pow Encryption Viewpoint. I am your old friend Lao Li. Hey, the global market has been experiencing ups and downs recently. Amidst the shadow of the Middle East conflict, the US stock market, which everyone is most concerned about, has surprisingly completed an astonishing dramatic recovery. Look, since the low point in late March, the S&P 500 index has rebounded by almost 10% in one go. The Nasdaq 100 index, which represents technology stocks, has set a record for the longest 10 consecutive bullish streak since 2021, with a cumulative increase of over 12%. This momentum is indeed strong enough. What's even more interesting is the change in market sentiment. Traders seem to be deliberately ignoring negative headlines from the Middle East. Goldman Sachs analysts even directly stated that the market itself has declared victory. People now prefer to believe that the resilience of the US economy itself is the cornerstone that supports the stock market, and the ongoing earnings season has replaced geopolitical news as the main factor determining stock prices. Many institutions maintain that judgment, which is that the low point on March 30th is likely to be the bottom of this round of adjustment. And there's another big news recently. Former US President Trump recently stated that the war is nearing its end, and negotiations may resume within a day or two. As soon as this statement was made, the market reaction was immediate. International oil prices plummeted by 4%, and the Japanese and Korean stock markets also opened higher in response. You see, the desensitization of risk assets to war actually reflects the market's expectation of easing the situation in advance pricing. But the key point is that there is a clear split in the story here. While the traditional market is thriving, the cryptocurrency market is giving a different signal, appearing somewhat hesitant. Although Bitcoin also rose, breaking through $76,000 at one point, it quickly fell back to around $74,000. More importantly, the funding rates in the futures market have all turned negative. What does this mean? This means that bears are paying to maintain their positions, indicating that players in the derivatives market are very cautious and not as optimistic as the stock market. The data also shows that retail investors are selling Ethereum, and in just 2 days, small wallet addresses have reduced their holdings by more than 1,700. There is even a consensus in the market that the current rise may be a bull market trap. However, sometimes this widespread skepticism actually creates conditions for sustained rebound in the future. The current pattern is quite interesting. Stocks are rising, while cryptocurrencies are a bit stagnant. Spot prices are rising, while the futures market is bearish. This suggests that the liquidity of the cryptocurrency market may still be suppressed by some tightening pressure. Overall, the market script has opened a new chapter, shifting from hedging to game fundamentals. However, the protagonists of various assets have different steps, and there is still much to be seen in this big game. Like and subscribe if you enjoy it. See you next time.